Kevin Gallagher, thanks for joining us. Well, the shares are rallying. You've certainly come a long way from a couple of years ago, haven't you?
Well, look, I mean, as I said this morning in our call, it's a great testament to the operating model that we put in place almost 3 years ago now, that we're very focused on generating free cash flow across those 5 core assets. And I think you're beginning to see the results of that strong, diversified, balanced portfolio coming through in these results.
Okay.
So, yes, it's great to see. It's good for the organisation and the people.
Tripling of profit this half, and really a lot of it, and a lot of excitement around your latest acquisition in the West, Quadrant.
Yeah, well, look, it's been great to see how well we've integrated Quadrant into our WA business, and you can see how that's driving down production cost and driving up our volumes, our sales and production in the West. It's now a very material part of our business. And what's really exciting about it, not only is that integration going well and the operations going well, but we've got some great growth projects like the Dorado project offshore, following the Dorado 1 discovery and the appraisal well earlier this year. And so that's given us a lot of excitement for how big this business can be going forward.
Yeah, well, I noticed in a recent speech you were actually suggesting, normally we talk about the East Coast, but really your input into the West Coast and looking at actually trying to solve a problem which might be coming down the track, which is rising prices in the West, bizarrely.
Well, it's bizarre, isn't it? But we've got a great opportunity to learn from what happened in the East Coast, I think, in the West. And today they're getting the benefits of a very vibrant LNG industry that over many, many years has supported a very strong domestic gas environment with low domestic gas prices. But it's been because the LNG projects have been full, and it's encouraged those big projects to be developed. And so all we are saying is, as some of those projects come off, and as the ullage opens up in some of those facilities, if other developers can get access to that capacity, that will encourage further supply and avoid the connection of the LNG market to domestic gas market in the West.
Yeah. Is Dorado, this new project, I mean, I think it's in fairly shallow waters, relatively speaking. Is it really the gold that it implies it is? The black gold?
Well, it's a phenomenal name, isn't it, for a project? But, yeah, look, I mean, we see it as a very high-value project. For Santos, our reserves position in Dorado, because of our high equity position, is actually stronger than our total reserves position in PNG today. And PNG is one of the strongest assets in our business. So we think it's a very high and material project for us, with 80% equity. It's very strong liquids, so a lot of oil and condensate as well, but also a lot of gas. And so, we see that, develop the oil primarily with the gas coming later, but a lot of gas. And when you couple that with the Corvus discovery, which was the largest gas column ever discovered in the Northwest Shelf when we drilled that last April, we can see a lot of gas that's going to need a market to develop it for.
Underpinning this as well, of course, is your Cooper Basin operations. Now, you've managed to get, we've had a high oil price as a tailwind, but you've managed to keep your costs of production reasonably tight. Yeah.
Well, look, I think the success story that you're talking about when it comes to Santos, it's not a price story. It's a cost story. And getting all of our assets to be free cash flow positive below $40 oil price equivalent has meant that the assets are then positioned to take advantage of upswings in oil prices, in commodity prices, so that we can get very strong cash flows at those positive parts of the cycle. But very importantly, to avoid decline when the oil prices or commodity prices drop, is having that cost base right throughout the cycle, so we can keep the high drilling activity levels up throughout the cycle and obviously maintain those production levels. And you're seeing that now come through at the Cooper Basin with production growth. We're targeting for the first time since 2010 by year end to have more than 150% reserves recovery. So we're growing the reserves at the same time as growing production, which is just it's a great story for the Cooper Basin.
Yeah, the Cooper's more than replacing yourself, I think you said. More than replacing itself.
So... Yeah, well, it's the first time since 2010 that we've been able to replace more than we produced in the same calendar year. And so ultimately what that means is more reserves life, more gas to put into the domestic market, And as we said, by putting more and more of our GLNG volumes out of our Queensland reserves, that frees up the Cooper Basin to be able to provide more gas to those southern markets, which, as we know, is a very important and critical aspect of our strategy going forward.
Well, let's go to those southern markets, and indeed East Coast Gas, which is supplying those markets. Where are we now, Kevin, with Narrabri? When I spoke to the New South Wales Premier, she seemed to indicate some sort of decision early next year. Where do you think we are with a potential green light on Narrabri?
Well, what we're hearing, of course, is that the expectation is early in the new year. And so, you know, we've provided the information we needed to the planning department. It's now with them. And we'll support any more inquiries or queries that they have on that. But it's in the hands of the regulator and the planning department with the New South Wales government now. And we're happy with that. We think it's a very robust process. We're happy with the integrity of that process, and we just want to let the process do its thing now, you know, run its course. And we would obviously want the approval as quickly as we possibly can, because the quicker we get it, the quicker we develop the gas and get that gas into the market. But you know, if it's first quarter next year, that's good enough for me, and then hopefully that will be a positive decision. Well, and then we get on and we develop it as quickly as we can.
Well, you've got sort of these conditional contracts you're putting together with a lot of manufacturers, getting some more support, including the Perdaman, looking at a local Narrabri ammonium nitrate plant. I notice. But if you do get the go-ahead early in the new year, are you going to be able to deliver gas in time to take over from Liddell, if you like?
Well, look, I think first of all, we're delighted that manufacturers are coming forward now and looking to contract gas early, because that gives us a lot of confidence in the project as well. And in terms of Perdaman, talking about setting up a business locally, that's even better. And we've been encouraging manufacturers all over the country to move their operations closer to the feedstock, if you like, the sources of gas, whether that's in Western Australia, Darwin, Gladstone, Roma and Narrabri, and take the jobs to the regions, but very importantly, reduce your transportation prices for the gas. And so we were delighted with that. In terms of how quickly we can get this gas to market, it's really a function of when we get the approval. And to be frank, we haven't spent a lot of money on the development planning.
But if you got it early next year, could you
see where the project goes?
If you got it early next year, could you deliver as Liddell gets decommissioned?
Well, look, I mean, it would be too soon to say what that time frame would be. We've got some appraisal drilling we have to do. Yeah. But what I can say is we'd be committed to delivering it as fast as we possibly can. And that's a commitment we're very happy to make, as is the commitment that 100% of the gas from Narrabri will be for the domestic market.
Right. The government, meanwhile, is still looking at putting some sort of pricing mechanism around its intervention powers. Do you think, firstly, that they will be triggering the Australian domestic gas intervention system? And secondly, will there be a domestic reserve on the East Coast?
Well, look, I'm not going to tell government what I think the policy should be. I mean, I don't think that's the place of industry to do that. What I would say, and I've said very publicly before, is I'm very happy, willing and committed to sitting with government to discuss all aspects of policy and how that might affect industry, new development, etc. We all know that the answer is new supply, and so anything that incentivises new supply and brings that into the market, I believe, will ultimately see the market functioning more efficiently than it has been and drive domestic gas prices down. I don't think forced price intervention is anything that's imminent. I don't think that anybody's talking about that being imminent, and I don't think it would be good for the market. It would actually stifle supply. In my view, what we've seen on the West Coast is that when the LNG projects were full, incremental gas was put into the market, and that's what drove domestic gas prices down. I think if we could get supply going here on the East Coast, we'd see exactly the same outcome, and we'd see lower domestic gas prices.
Finally, Kevin, quite a big deal announced today by Shell, not in oil and gas, but going into the retail side. Any observations?
Look, I mean, I think that's a question for Shell. My focus today has really been on Santos and talking to our investors and media like yourself. And you know, I think what I'd be saying is that Santos is focused on delivering as much gas to our respective markets as we can. And we're very focused on helping with the East Coast domestic gas situation. I made the comment this morning, which would have surprised some people, I suppose, but you know, I acknowledged our joint venture partners at GLNG for putting more gas into the domestic market than the HOA commitments they signed back in 2017 required them to do. And I think, you know, that's something often gets missed in all of that, that the HOA appears to be working. ACCC acknowledged that this morning and said that it's less likelihood that there'll be a shortfall in 2020 and more supply in 2020 than there was in 2019.
Right, Kevin, sorry, one last thing. Your outlook and the oil price.
Sure. Well, look, my outlook, when it comes to oil price, you know, I'm hopeless at predicting what it is. That's why we focused on cost of supply rather than the price itself. In terms of outlook for our business, so what I would say is we talked a lot today about new development projects like Dorado. Barossa is an LNG project in Darwin. We're very excited about that. It looks like, it doesn't look like, we're well on track, I should say, to take an FID early 2020. And what really excites me about Barossa is it's a low-cost development project because of its brownfield upstream nature. You know, the LNG plant's already been built, so we don't have to build one. And it's going to be very competitive in terms of cost of supply. So we're very excited about that. And we're going to continue investing heavily in the Cooper Basin in Queensland and driving that gas production up and hopefully helping ease the pressures here on the East Coast.
Kevin Gallagher, dividends and a very strong half. So thank you very much for joining us.
Thank you. Always a pleasure. Thanks.